Traders Corner is proudly brought to you by IG, the specialists in CFD trading.
Welcome back. You're watching Traders Corner, and as always, I'm joined by Garth McKenzie, founder and editor of Traders Corner. Garth, welcome.
Hi, Julieta.
Garth, it's a good time to be long of the markets. The All-Share Index back above 50,000, and in fact, a long, I suppose, trade was what you implemented for the portfolio last week, using a fairly different implement, shall we say, an IG markets option. And so perhaps if you want to start off the show by reviewing that.
Yes, right. Well, the trade that we did last week was on the IG markets SA40 contract, and it was a R2 micro contract. So just to put the viewers into perspective, what this is, it's a CFD product, and it mimics the top 40 spot index. Every 1 point that the index moves is represented by R2 movement on this product. So it's quite a nice product. It's a small product, and it's a nice beginner product almost for people starting to trade the market, because it gives you a fairly small exposure to the market. Typically, our top 40 futures that we always trade move in 10 Rand per point, which is a lot. And it's certainly too big of a product for most people to trade when they're starting out. So these micro contracts are actually very, very attractive from that point of view. And IG Markets are our sponsors on this show, obviously, but they're the only people in the market that offer this product. So for those that are wanting to start out, this is actually a really interesting product to consider. So if we look at the trade that we did last week, the chart that I've got up on the screen now is a daily chart of the top 40 index, represented though by this R2 micro contract. And what you can see over there is that I'd identified an inverted head and shoulders pattern that had happened. Now bear in mind, this bottom down here, it's 41,000. That was when we were really, markets were collapsing in the middle of October. We saw a nice rebound since then, and I said at that point that I felt that the low was in, and that this inverted head and shoulders was now probably, allowing us an entry point on the long side. What I also identified was that there was this little triangle structure on the right-hand side over there, and that was actually what got me into the trade initially, followed then by the inverted head and shoulders pattern. Those black arrows indicate the projection from a head and shoulders, the inverted head and shoulders, that you project that same height up from where the breakout occurs, and that gives you your potential target, which in this case is around about 46,400, almost back to the previous highs, actually, if you can believe that. So what we did was we went long of 2 contracts of this SA40 micro contract at 43,080. My stop loss was 42,350. And I said at the time that I'm looking for a target of 45,000. I'm being a bit conservative here, and I'm not going to be too greedy. But we're going to see, we're getting up towards that 45,000 area now. And what I may very well look to do is actually run a trailing stop loss on this, so that it keeps us in if the market continues to run ahead, but if the market rolls over and starts to turn south again, then we'll get out. But so far, so good. It's working very nicely for us, and we're up about 6,000 Rand on this trade as things stand at the moment.
And a micro contract's also good, I imagine, if you don't want to take too much risk at this point in time, and it has been quite a hairy month, essentially, although you do seem to have come out of it fairly well, and we'll talk about that in a moment.
Yes, no, that's it. We have done fairly well. I think the point to remember also is that when you've got heavy volatility in the market, like we've seen recently, and I mean, we're talking days where the markets had a daily trading range of more than 1,000 points on a number of occasions recently. What you must remember as a trader is that you can actually make very good money on really small positions in that kind of volatility. So you don't need to trade excessively large size. You can actually do quite well on small positions.
Yeah. Okay, so that is one of the trades that you have open on the portfolio. One that you have closed, though, is Bidvest, and you were in it for a few weeks.
Yeah, about 6 weeks we've been in this Bidvest trade. So if you have a look at the chart that's on the screen at the moment, what I'd identified when we initially went into this trade was that Bidvest has been range bound, with the bottom of the range coming in at 280 Rand and the top of the range at 300 Rand. And what's very evident is that when you see these types of sideways ranges, often there's an overshoot to the bottom and to the top of the range. And when you see those overshoots and then a reversal back up into the range, that's actually a very high probability trading opportunity, because invariably when you see that, you then get a move back to the other end of the range. And what we did in the beginning, in the end of September rather, was we went long of 500 CFDs of Bidvest after we had seen the stock break to the bottom of that range and then reverse back up inside the range. So we went long of 500 CFDs at 280 Rand and 70 cents, and my stop loss was 274 Rand. and my target was for a move back to the top of that range. Now, there was some hairy times in the middle of October where the stock went and it sort of threatened to flash our stop loss, but we were never stopped out. Also recall that we received a dividend here, so it kind of gave me a little bit of flexibility in knowing that we had the dividend in the bank anyway.
Yeah.
Anyhow, it's worked, and we've seen the share trade up to, it's taken 6 weeks, but it got there.
Yeah.
So we sold it out now at 300 Rand. I had an order in to sell at that level, and it's traded, and I'm out. So it's been a successful trade all in all. After all costs have been taken into consideration, we made 7,900 Rand on the trade. But also remember, we received a dividend of 2,160 Rand. So all told, we came out with more than 10,000 Rand profit on this trade. So it's a good story in the end.
Yeah, and it's always somewhat surprising to know that you do get dividends as a CFD trader.
Yes.
And quite a welcome addition to the profit there.
Very much so, yeah.
Okay, so Garth, when I talk about hairy, the option structure was what gave you grey hairs for a couple of weeks last month.
Yeah.
Where are we now? Because presumably it's kind of balanced out fairly well.
Yeah, so it's come back for us, and we're not. I'm not as worried about it as I was a few weeks ago. If you have a quick look, just to recap, this is our put spread option structure. Above 45,000, the structure costs us nothing. Below 45,000, it makes money up to 43,350, and then it starts to dwindle away after that. Now, we did spend a bit of time down in this red danger zone 2 weeks ago, which was quite scary, but we're now actually looking a lot better. Remember, though, that what I did some time back was that I used this structure as a hedge against a one long top 40 futures contract. So I'm long from 45,200 of one top 40 futures contract. I've got 2 put options against that. So what it means is that we kind of have a V-shaped payoff from around about that 45,000 area.
Yeah.
But now, where is the market right now? It's where that dotted line is. So now this is kind of like the dead zone. After all that activity and hype 2-3 weeks back, we're now back at this point where, in fact, we're almost square on the whole thing now. We've got a mark-to-market profit on the options of 2,000 Rand and a mark-to-market loss on the top 40 future of 3,000 Rand. So net, we're down 1,000 Rand at this point in time.
In fact, we were more in the money last week because the market was a little bit weaker.
Yes, that's it. Remember, last week we were closer to this 43,350 level. So that's where the profit is actually at its pinnacle, if you like. And obviously people are going to say, well, why not just close it out then? But it's not as simple as that, because these options are priced on volatility and theta and time value and all those kind of things. It's not as simplistic as what I've painted it here. This is a linear payoff profile as it would look at futures closeout.
Which, of course, was the issue, although, thank goodness, you've managed to ride it out. You know, also a bit of luck, I guess, on your side.
Yeah, certainly a bit of luck. You know, this thing could have actually really been ugly if the market had continued to head a lot lower. And a lesson learned for me, and I hope for the viewers as well.
Yeah.
You know, I think I'm going to review the way I do these structures in future, because that danger zone to the left-hand side there actually can get quite nasty.
Okay, guys, so that's a review essentially of what has happened in the last couple of weeks. Now, I know you want to look at BHP Billiton today, and it is a share that you in fact identified a couple of weeks ago.
Yes, I mentioned on the show a few weeks back that we would be keeping an eye on BHP Billiton for a potential long trade, and this week we're actually doing the long trade now. So this graph that I've got on the screen now goes back all the way to the beginning of this bull market in late 2008. And if you have a look there, there's an uptrend which joins all the lows since then. And all the significant lows, let me put it that way. That's a nice tight-fitting trend line. And what's evident is that we've got quite strong uptrend support on BHP Billiton that comes in at 280 Rand. So that's the first thing that gets me interested, is the fact that we've got this long-term uptrend support. We've been down to 280 Rand. We've actually flushed below that level last week and reversed back above it now. So if I zoom in a bit more and look at the more recent trading action, now we're looking back over the last 6 months or so. You can see that the recent downward move that we've had since August, and the stock's actually lost a lot of value, lost more than 25% of its value in that time. However, there's a couple of interesting things here that are getting me interested. First of all, there's that 280 Rand support that I discussed on the previous chart. But what's very interesting here is notice the positive divergence that we're beginning to see on both the stochastic oscillator and on the RSI, the relative strength index. Now, what that positive divergence is, it's where the share price makes a lower low, yet your oscillator makes a higher low. And it's an indication that the momentum of this move to the downside is actually starting to run out of steam. And very often when you see that divergence, it preempts a change in trend. And I've seen this numerous times, so that's really what gets me very, very interested here. The downtrend that we've got on BHP Billiton is put on the chart there now. We really need to see the price breaking above 292 Rand to actually validate a breakout through that downtrend. I'm kind of preempting it a little bit.
Yeah, because you have actually entered into a trade.
I have entered into a trade already. I'm preempting it because I do believe in that positive divergence. I think it's going to work for us. But as always, we've got a stop loss in place in case I'm wrong. I've gone long at 284 Rand. And a stop loss, I'm using a very loose stop loss right now, 270 Rand. I may well look to tighten that up once we've got a break of that downtrend. My target that I'm looking for here in the near term anyway is 315 Rand, and that also might potentially be reviewed in the weeks ahead. But that's how I'm doing it. Okay. So if we have a look at the mechanics, as I said, I've gone long at 284 Rand. My stop loss is 270 Rand. The risk per share, therefore, is 14 Rand per share. I'm risking 1.5% of our account. So we've got about 350,000 Rand in our account. 1.5% of that is 5,250 Rand. That's what I'm willing to lose if this trade goes wrong for us. I'd take that capital risk and I divide it by the risk per share, and that gives me 375 shares or 375 CFDs that I can buy, which is what I have bought. My target's 315 Rand, as I mentioned. So my risk to reward ratio there is 1 to 2.2, which is decent enough. And the exposure, the total value of BHP Billiton shares that we're actually taking an exposure to here is 106,000 Rand.
Guys, do you think there's going to be a sort of a big spring back in some of the resources, or do you think it might be, I mean, whether if you knew, we wouldn't be sitting here, but is your gut feeling that it's going to be a slow grind higher for the Anglos and the BHP Billitons, or that it might be sort of a very fast recovery in some ways, having been so beaten down over the last couple of months?
Yeah, look, seasonally, we've noticed that the final quarter of the year, leading out normally to February of the following year, is actually quite a seasonally strong time for the resources shares. I think these resource stocks are really beaten down now, and there's so much negative sentiment around the commodity space. There's been a hell of a lot of noise on TV channels, financial media, about how bombed out the resources are, how bombed out commodity prices and things are. I do think that there's potential that there could be some rotation where a lot of money managers look and say, well, you know what, actually, there's not a lot of value to be found elsewhere in our market now. But there is some value now that the likes of Billiton and what have you have been smashed down so hard. Maybe there's a bit of value to be found here. And that could potentially see the shares rebound higher. That's kind of what I'm aiming for and what I'm playing to here. But as you said, if I really knew, I mean, we'd be sitting on our yacht in the Bahamas. So we don't know, and that's why we have a stop loss. I think this is a high probability trade, but of course, even the best high probability trades can sometimes go wrong. And that's why we've got a risk management strategy here. And
also 1.5% of the accounts, you say it's a high probability trade, but it is slightly less than the 2% maximum position that you give yourselves.
Yeah, it is. And I think that's also because we've got a couple of other long positions still on via those top 40 futures and things at the moment. So we're quite well exposed to a market moving higher. Yeah. I don't want to get too aggressively long.
Okay, so Garth, what does the portfolio look like given the events of the last week and some of the trades that you've enacted on the portfolio?
Yeah, so we 348,000 Rand on our portfolio now, and although it's been a good week for the market, and people might say, well, how come we haven't gone up much?
Yeah, in fact, we're down
we're slightly down. The reason is because of what's happened in this option structure and the theoretical payoff where we stand right now. So that we've actually kind of lost money on that structure over the week, as it were. Bidvest, we made a good profit there, 7,900 Rand. This SA40 micro contract that we long of is up 6,000 Rand for us, and then we've got this week's BHP Billiton trade. So that's how it stands at the moment. Overall looking good, and I'm fairly comfortable with this portfolio as it is.
Okay, and then your last course of the year is yet to come?
Yes, it's on the 15th of November, so it's around about 2 weeks' time. It's on a Saturday. Anybody that's interested in attending this high probability trading course, please email me, garth@traderscorner.co.za, and I'll send you the information.
Great. Garth, we'll leave it there. Thanks as always for joining us.
Thanks.
That's Garth McKenzie, founder and editor of Traders Corner.
Traders Corner is proudly brought to you by IG, the specialists in CFD trading.